Hi everyone. I am here in front of you to discuss about what is bank reconciliation statement. So before that, I would like to introduce myself. My name is Angel D. Arroyo from Grade 12 St. Augustine. So hello again. In this lecture, we will define bank reconciliation according to fundamental accounting principles, whilst 22nd edition, the definition of the bank reconciliation is report that explain the difference between the book balance of cash and the cash balance reported on the bank statement for the purposes of computing the adjusted cash balance. In essence, what we are going to do here is we were going to take the bank statement, usually a monthly bank statement, as to the end of the month and compare that to what we have in the books. Why do we do that? Because the bank is really a second recording of our entire cash account. These cash accounts being one of the most important accounts. Therefore, if we can tie out what the bank has reported to what we have been reported, we have one of the best and most secure checks to the fact that we have recording cash correctly. So, for example, we might have the bank statement in this case at the end of February showing the beginning balance, showing the activity, showing the ending balance at the end of February, and then giving us the detail, the deposits and the checks and the other of transactions that would be involved in order to get our ending balance from the beginning. We were going to take the bank statement, it's from the bank, this comes from the bank, and compare that to our books is something like this. This is going to be a kind of an example of our general ledger should have all the same transactions recorded because of course our general ledger is recording the cash transaction for cash. Therefore, we should be able to take our general ledger and basically just check it off to all the transactions that are happening in the bank and tie everything up now, of course, when we do that. So the next is causes of difference in bank reconciliation. First is check issues but not presented. This should be added into books of account bank balance. And the second one is check deposited but not cleared. This should be deducted from books of accounts bank balance. And the third one is bank charges or loan interest debted bank but not entered into cash book. This is also should be deducted from books of accounts bank balance. And the fourth is deposits interest credited by bank. This should be added into book of accounts bank balance. And the last one is direct collection on behalf of customer. This also should be added into book of accounts bank balance. So next is cost of bank reconciliation difference. First is direct payment by banks to the suppliers. And next, dishonor of check. Next is check received but no deposited into bank. And the last one is errors. So this is the example of bank reconciliation statement format. So next is the bank reconciliation step by step. To prepare bank reconciliation, it is important that both bank book in the bank statement of the business are available. Once both these documents are available, the following steps must be followed to prepare a bank reconciliation statement. So here we go in the bank reconciliation statement step by step. first is compare the balance from the bank statement with the bank book. And the second one is identify the type of differences. And the third one is adjust the bank book and bank statement balances. And the last one step is compare the balances again. So next is, in this video, you have learned the following. First is, business organizations prepare a cash bank and the bank they are dealing with prepares a passbook. The balances of both the books should match. And next is, if there is discrepancy in the balances of the cash book and passbook, a business organization at the end of every month prepares a statement called a bank reconciliation statement or BRS. Next one is, the reconciliation process helps to bring out the errors committed in either the cash book of the passbook. And the last one is, bank reconciliation statement helps to eliminate bank statement errors. So that's all for today. Thank you for watching.